It turns out First Republic wasn't actually a bank. It was a trough for pigs. And of course, by pigs, I mean uber wealthy coastal elites who were given sweetheart mortgages. Mortgages that no bank had any business giving to anybody, regardless of how high their credit score was or how wealthy they were. And after the banking crisis in March has started with the failure of Silicon Valley Bank, now First Republic finds themselves needing that money back that they lent to all those wealthy elites, and so they need to sell those loans to anybody. Problem is, the mortgages that were given to these coastal elites were so sweet that nobody in their right mind would ever take the other side of that deal. And so First Republic Bank is, as we speak, aggressively shopping this crap around to anybody on Wall Street with enough money to buy this stuff. But what they're really doing is looking for a patsy to hold this bag, a bag consisting of interest-only loans to Wall Street pigs who bought multi-million-dollar mansions in Beverly Hills and the Hamptons and San Francisco wine country. And now First Republic, in typical Wall Street fashion, is looking to socialize those losses among as many people as possible. Heading over to Bloomberg, dated today, First Republic Bank to weigh up to $100 billion in asset sales. The plan would address the struggling bank's asset-to-liability mismatch, and buyers might be offered incentives to pay above market rates. First Republic Bank is exploring divesting $50 to $100 billion of long-dated mortgages and securities as part of a broader rescue plan, according to people with knowledge of the matter. Any sales would help reduce the bank's asset-to-liability mismatch, the people said, asking not to be identified because it would irk Jack's pet peeve about anonymous sources and because they were discussing confidential information. Potential buyers, including large U.S. banks, might receive warrants or preferred equity as an incentive to buy assets at above their market value, one of the people said. Isn't that a great sales pitch? We're looking for people to buy assets at above market values. You ever see that on a price tag? You're looking to buy something, you go to the store, and then you look at the tag, and it says more than it's worth. That's quite a sales pitch you got there, First Republic. What they're doing here is they need to offload these loans. These loans are not worth anywhere near what they say they are, so they need somebody to overpay. Well, who's going to overpay unless you promise something else? In this case, warrants or equity, basically an option to buy First Republic stock at some later date at a predetermined price, which is really just a bet that First Republic survives this mess. It's kind of a sucker's bet. The lender is trying to shore up its balance sheet to avoid being seized by the FDIC and clear the path for a possible capital raise, the person said. It may need the U.S. government to facilitate negotiations with some of the country's largest banks to stabilize the lender as it executes its turnaround, the person added. So what's going on here? Why are First Republic's liabilities now so much more than their assets? Well, it turns out this is a lot more than just rising interest rates. This is something entirely different. And for that, we go back to this article that came out last week about First Republic. First Republic worked hard to woo rich clients. It was the bank's undoing. The bank attracted wealthy clients with loans that have become a costly hurdle to finding a rescuer. Now, this morning on my daily live stream, I said that First Republic was worse than I thought. Well, it turns out it's even worse than I thought when I thought it was worse than I thought. And I thought it was pretty bad. When you see the details of what this bank did and how they're trying to weasel out of it, it will make you sick to your stomach. In America's richest enclaves, word spread quickly. A bank was offering loans on sweet terms. Wealthy homebuyers and property investors with high incomes and sterling credit scores could get a mortgage from First Republic Bank with a rock-bottom rate for several years. Better yet, they didn't have to start repaying the principal for a decade. That's right, folks. Interest-only mortgages were being offered by First Republic Bank to the country's wealthiest elitists. And keep in mind, these are interest-only mortgages that were originated back when interest rates were nothing point nothing. So the payments on these loans are essentially nothing. Nobody in their right mind wants this garbage on their balance sheet. The people don't even have to start paying these loans back for 10 years. Across Manhattan, the San Francisco Bay Area, and Southern California, those terms attracted legions of wealthy clients, including executives from other banks. Put a pin in that, executives from other banks. We'll circle back to that one in a little bit. The loans left borrowers with more cash to invest and spend than if they financed their properties with more conventional mortgages. You know, the conventional mortgages like you and I have to get, where you actually have to make payments on your homes. Demand was so strong that it helped First Republic double its assets in 4 years while deposits surged. Deposits that are now gone because of the bank run. And just check out this map here showing Long Island, New York, where some of these mortgages were issued. Now, the darker the shaded region, the more amount of interest-only mortgages were written in that area. And check out here in the Hamptons in New York, some of the most expensive real estate in the entire East Coast, where First Republic issued more than $500 million worth of mortgages for interest-only payments during 2020 and 2021 alone. Somewhere between $150 and $300 million in Southampton, over $100 million in Greenwich, not to mention Manhattan. These are some of the most expensive homes in the entire country, and First Republic was giving out interest-only mortgages on these homes, tens of millions of dollars each for some of these houses, to the wealthiest individuals in the country, mostly executives from other banks. Can you see now how First Republic was just a trough for pigs to gorge on? And don't worry, folks, it wasn't just the East Coast elites that were pigging out. Check out the action on the West Coast, especially right here. More than $900 million in interest-only mortgages issued in Beverly Hills alone. Also Pacific Palisades, Malibu, Hermosa Beach. Again, some of the most expensive houses in the world were bought with interest-only mortgages courtesy of First Republic Bank, who has now gone to the Federal Reserve hat in hand begging for a rescue. And it wasn't just Southern California. Check out things up north in San Francisco wine country. Hundreds of millions of dollars in interest-only payments made in Rutherford, Hillsborough, Atherton, Portola Valley. If only I had a little bit of budget for this video, I swear, folks, I'd hire Robin Leach to narrate this thing. This is a who's who, where's where of grotesquely overvalued real estate all over the country being paid for by favorable mortgages offered to the most greedy, wealthy, fat cats imaginable. And now this bank that wrote all these loans is looking for a sucker to buy it. And if they can't find it, they're going to be looking for the government to bail them out. In other words, the taxpayers will be left holding the bag for this through socialized losses paid for by money printer Fedgo Burr. Let them sit on the Fed's balance sheet while the poor get poorer from inflation. All the while, these people stay in their homes, because who walks away from a cushy interest-only mortgage that doesn't even need to start being paid back for 10 years when interest rates are nothing. Among Wall Streeters, it was an open secret that the San Francisco-based lender was offering particularly attractive terms on mortgages. New York City property records from the past few years show customers came from all over the financial sector and included industry leaders such as Goldman Sachs President John Waldron, who took out an $11.2 million mortgage in June, and R. Lawrence Roth, a board member at Oppenheimer Holdings. Another Goldman Sachs partner, a former executive at Blackstone Inc., and a managing director at private equity firm Sycamore Partners also borrowed millions from the bank, property records show. Beyond the finance industry, other examples of First Republic customers with seven-figure mortgages in New York include music mogul Todd Moskowitz, as well as an executive at a technology venture and the owner of a fine art gallery. All of their loans had 10-year interest-only periods and rates starting below 3%. Interest-only mortgages made up a higher share of originations at First Republic than at any of its peers over the past half-decade. By the start of this year, 59% of the bank's loan book was comprised of single-family mortgages, and 3/5 of those, about $58 billion, were still in interest-only periods, according to the firm's annual report. Principal payments on the vast majority don't start until at least 2028, and you wonder why they can't find a buyer for this stuff. Now, considering the fact that bank presidents, wealthy executives, and partners from financial firms all across the country received cushy mortgages from First Republic Bank, interest-only deals at rock-bottom rates where they don't even have to start making payments for decades. Considering all of their houses were bought with this money, is it any surprise that 11 banks lined up to deposit $30 billion at First Republic last month? Back when all the bank runs were happening, back when First Republic Bank was on the brink of failure, why is it that JP Morgan and all these other banks lined up to shovel cash over to First Republic in order to keep that bank afloat? Do you think the purpose of that rescue plan was really so that they could demonstrate the system's resilience, as this article is claiming? Or do you think this was about preserving this personal slush fund for Wall Street executives who could borrow tens of millions of dollars to buy houses for nothing as long as First Republic stayed in business? Or maybe it has something to do with they knew if First Republic Bank failed that eventually more dominoes would fall over and their banks might be next in line to fall. Either way, all these executives at all of these banks are playing a very dangerous game right now because none of these decisions appear to be made by people who had any skin in the game. In each case, this was reckless lending that was done with somebody else's money for the benefit of the people who were making the loans, not the people who were risking the money. This is a textbook case of moral hazard run amok in Wall Street. And of course, as always, these banks knew that John and Jane Q taxpayer would be there to bail them out when these deals went south. Back in the Bloomberg article from last week, behind closed doors, authorities floated an unusual idea for helping the bank if the situation worsened again, expanding an emergency Federal Reserve facility in a way designed to bolster First Republic, people familiar with the talk said at the time. The Fed's facility currently accepts instruments including U.S. Treasuries, agency debt, and mortgage-backed securities. Any changes would have to apply to all banks, the people said, but officials believed it would be possible to widen the facility in a way that ensured First Republic would benefit. It's unclear what sort of assets or terms they had in mind, but the bank's mortgage portfolio is unique. These crooks knew exactly what they were doing. They were giving themselves sweetheart deals at the expense of other people's money, and they knew worst case scenario, the Fed had their back. And when news of this proposed sale of First Republic assets hit the tape today, you can see what happened to the stock, down 49% on the day, trading at just $8.12. And this chart here, this big decline you're seeing, that's not even what happened today. You see right here, this little tiny blip right there, that is today's 49% sell-off. This is the sell-off from back in March, and this is back in February when the stock was trading at over $150. If you're a First Republic customer and you see the stock in your bank is down 49% in one day, what are you going to do? Chances are you're probably going to go get your money out of the bank. So First Republic is running out of time here. They need to find somebody to buy these mortgages fast. Otherwise, they're going to be right back where they were in March in the midst of a bank run. They've already lost over $100 billion in deposits, so the clock is ticking. So if you're First Republic Bank, what are your options here? You could sit around and wait for the clock to run out, in which case you have to go hat in hand to the government for a bailout, which is going to be a tough sell politically when people start to realize why this bank needs a bailout because they gave all these loans to the super wealthy. Or you can start shopping around to anybody hoping to get them to overpay for these loans. So hide your pension, hide your 401k, because they're robbing everybody up here. Till next time, live small and dream big.